What's up everybody, Tom here with another video. I don't know about you, but I'm pretty excited for what we're seeing in the stock markets right now. And in today's video, we'll be discussing the S&P 500, Nasdaq, Tesla, Amazon, gold, silver, Bitcoin, and more. There's plenty to discuss. We're starting to see a bit of a dip potentially happening here, and we've got 10% down in Tesla. So there's a lot to talk about right there. Stay tuned, guys. This one's going to be good. Okay, everybody, well, let's begin our market recap and look ahead at the markets for the next 24 hours and weeks ahead. And we'll start off here with the heat map of the markets closed the 9th of November, 2021. PayPal pretty disappointing through the day, including all financials. Amazon doing very strong numbers. We'll have a look at that in today's video. And then, of course, we've got Tesla, the big one, almost down 12% through the trade day after Elon Musk obviously announced that he would be selling a percentage of his shares or possibly selling a percentage of his shares, and a whole bunch of the board members filed to sell as well. And I guess this brings up a point of where, taxation is changing in the US landscape. As we start to get closer and closer to the deadline of taxation change, or what we expect to be there, will this be kind of a dip that happens across the market with a lot of CEOs opting to do this? Now, of course, you could say there's a whole bunch of different discussion points around this, and we'll be discussing it more as we approach closer to these deadlines. But taxation is one of the biggest enemies of the stock market. So we must remember and keep that in the back of our mind. Government money spending, always an important thing, and we discuss that a lot in this channel. Following the government money or the Fed is very, very important, but also following taxation is super important. So this is something that I think a lot of people overlook in their market discussions, and we'll certainly be bringing it up when it's necessary. Let's talk about what happened with the Dow, the S&P, the Nasdaq, and the Russell. All were down throughout the session. The Dow and the S&P actually did okay, only down 0.35%. As we expected, a bit of a pullback here, and I think we are going to get more, and we'll talk about that soon. And then we have IWM and the Nasdaq ending fairly negatively, 0.69 and 0.58 for the session. Let's move over to which sections were doing the best, which sectors were the best in the markets. And here is where we get a little bit of a story of maybe a slight rotation into safety for a potential dip here in the markets. Guess what was number one? Utilities, a rare sector to be number one on the charts. Also, consumer staples really close behind, materials, energy, and we have those real estate REITs as well. The weakest for the session was XLY, and that's because, of course, Tesla is in that, and we saw that go down 1.85%, really bringing down the data there for XLY, the consumer discretionary. Let's talk about Q3 earnings beat data now, 71%, so still above the magical 70% number with all the big companies coming out. We've got 1,234 beats and 509 misses. So really the fundamentals, or at least the earnings, are still stacking up against the market price at this stage in terms of beat data. Remember, we like it to be above 70% or as close as it can be to that, because that really proves that the market's expectations are being partially met. If we're talking about what's going on in terms of earnings right now, we've just had Coinbase come out. That obviously missed. We had Upstart missing there as well. And we've got Unity missing and a whole bunch that happened after the close. But we move ahead for the rest of the week. What else do we have? Well, we have SoFi coming out. That'll be a very interesting one. Huge amounts of retail trade going into this stock in recent weeks and recent months. We've got Walt Disney as well, performing after the close. We've got Fiverr before the open, and a whole bunch of smaller but still very important companies coming through the week. Talking about Seasonax, talking about where we are in earnings, this is still in line with what we've discussed now for about a week, which is a huge movement up, which we totally expected. Hit our resistance highs, ideally, in terms of technical analysis, we'll be talking about soon. And then we move down through the middle of the month. Now, you'll notice we have highlighted here the 12th of November as the low in terms of Seasonax data. Now, this data is not necessarily the be-all and end-all, but it certainly does make sense to what we've currently seen from a TA perspective. And it's along the lines of that story of pullback, maybe hit the daily 20, daily 50, those types of things, then follow through with some bullish action into hopefully what we're going to see, which is a Thanksgiving rally, and also another very big stat being the Christmas rally, which happens in most years. Fear and greed over time, let's just refresh this chart here, and you'll notice that it's getting higher and higher. It's basically the oscillator is well above 80 in terms of all the fear and greed. And if we scroll up and we go through all of the main areas here, you'll notice a couple of things that we like to look at. Put-call ratios still remain very high in favor of the calls, which means that there's a higher chance that we do get that pullback. If there's more calls open, especially short-dated calls like most retail traders like to do, there's more money on the table for Wall Street to be taking. Extreme greed being shown here, 86 on the reading. When we get this high, we've got to be starting to say, is there a reason for us to see a dip in the markets? And I think there is when we take a look at the technical analysis in just a few moments. VIX, volatility, fear. We've talked about the 15 now for months and months and months. This is the level where we always expect a little bit of fear and a little bit of volatility to come back into the market. And this time was no different. It hit 15, it's bounced up. It hasn't quite broken the double bottom here. You'll notice if it was holding a little bit stronger throughout the session, that would have been a bigger deal for it. But I think some VIX traders will be looking for that quick spike up to above the 20, maybe like a 22 number or something like that. They'll then look to potentially sell that off, and that could be timed well with the market moving down to the daily 20. Remember, they're all kind of connected, these markets, so the fear really showing there. Another thing that's showing a little bit of fear in the markets is the TLT. The 20-year bonds actually going up very strong. So we had the base down at this point. We have, of course, the resistance, which is broken above, and TLT has now moved back to the previous resistances. Resistance, 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 resistance. This is now a pivotal point for the bonds. And we've talked about the sneakiness of the bond market before. Bonds often rise before some kind of correction in the market or some kind of dip because people move their money in. A lot of people don't understand that the way the market really works is that funds have to be invested at all times. Now, they can choose to have their money in possibly cash, but in general, they will move between bonds and they'll move between stocks and sectors. So they'll move between the bonds and let's say the stocks or other investment assets, and then they'll rotate back through and they'll treat bonds like cash. Remember, if we're seeing an increase in bonds, that can also mean an increase in demand. We'll usually want to time that together with a bit of volume increase, which we've seen recently. And that's the good type of market that we want to have. So a breakthrough of this 152 could be very pivotal and certainly something we're looking at. This also times in well, though. The reason why this has happened is because the US 10-year really has fallen off substantially since the Fed came in and discussed what they're discussing. So it seems like that inflation fear is really going away from the 10-year. It's coming back down now to previous resistances, becoming support, and it's really timed around those 20-year bonds. Remember, the 20-year bonds are very susceptible to the interest rate hikes or lowerings as well. Let's check out gold. Gold moving up. We've talked about the seasonal here for quite a few sessions now. If you're new to the channel, you enjoy seasonal discussion, all this type of stuff, please make sure to subscribe. I think you'll really enjoy what we go through here. We've got a great community. And I want to say thank you to the community as well for smashing that like button every day. It really is helping us at this stage in the YouTube algorithm world. Let's move through gold here. What have we got? We've got this 1832 resistance, and we've had this now once, twice, 3 times, 4 times. We're coming up for the 5th touch. We're looking a lot stronger in what is a good seasonal month. Remember that back of November into December rallies we've seen. This was 20. This was 19. This was 18. This was 17. So for many years now, we've rallied in the back of November into December, and we've seen a lot of strength in gold. And it's right at that resistance. We go down to the daily. You'll see it's touching it at this point. And now we wait for either a bit of a pullback, then hopefully a rally again. And if it does break through this zone, a potential participation phase for some pretty significant gold action. And a lot of people have really looked at gold weekly over the last couple of months. People have been saying, oh, gold's over. It's all about Bitcoin now. And I think that's when you really want to start looking at things and saying, okay, well, gold's not going anywhere. It's still a very big asset class. People haven't forgotten about it. It's just, it wasn't in favor. And things come back into favor all the time. So I think gold and silver are both really making some big leaps forward in terms of the sentiment. Let's move over to the elephant in the room, and that goes to Tesla. Now, Tesla doesn't have any super strong levels on it other than that previous $900 kind of resistance. And that's going to be the strongest level that most people are looking at in terms of a pullback occurring. We knew that we were in a big ramp. We've kind of seen this blow off occur. That's the way the cookie crumbles. Obviously, when Musk announces that he's going to sell a huge portion and the CEOs and people in the company will start filing to sell their stock, that doesn't look exactly healthy or great for the company. I'm not too concerned about the sentiment overall for investors. However, this pullback could be an opportunity as well that a lot of you guys are looking for. Weekly 20 will be something to watch. Weekly 20 often where after a large kind of movement up, we've seen it come back to that level and find some buying pressure. Over here, it didn't quite do it. It consolidated for a while. But during almost any of these big pull-ups, we've had a period of consolidation that lasts upwards of a month to even multi-months. And we'll be certainly watching this one quite closely. Another thing we want to look at is this week. Where do we expect the market to go? So let's just quickly take a look at the options walls. And I think here it really shows a story that $1,000 is very strong in terms of a support this week. Why? Because someone's just putting kahuna amounts of options at that level. And it's what we call a put wall. It's very unlikely that the market will want to close underneath this level by too much. It does need to pay out that option then. They'll be paying plenty of options this week. Obviously, these 1100s, these 1050s, these might all be paid. But we are hitting exactly on that 1,000 put wall. Now, it's only a put wall. There's no technical to go with it. Ideally, what you would generally see is you have like a market which has got resistance. Let's say this was $1,000. So we'll call that 1K. The market breaks through. The market then pulls back to the 1K. We've got a moving average there as well. And we've got the put wall. This is where we use the analysis and we go, okay, cool. We've got a great support. We've got previous resistance becoming the support. We've got the moving average, possibly got a trend line. All these things along with the put wall, that's a tick in our book in terms of success. And if you're interested in getting these types of charts, please remember a free 7-day trial in the description down below of our private community where the robot is, and obviously a whole bunch of people like you discuss their stock trades and everything else in the community and the ideas and learn and educate each other together, which is really excellent. Let's move over to Amazon now. Let's talk about what's going on here. Amazon, some would say uncharacteristically strong. I would say seasonally strong. Really nice closure here for it. Not quite above the previous kind of wicks, but certainly above one of them. And we have seen a nice turnaround here in Amazon. So effectively, a big movement up. Lightning bolt, of course, on the weekly as well as the daily down here. Seasonally strong, great breakout. I've got big plans for Amazon, and while it may actually come back down a little bit if the market starts to dip and further weaken, which we'll be talking about soon, I still feel like this is a good looking chart. What do you guys think in the comments down below? What is your target for Amazon if you like this stock right now? Big breakout, certainly closed above this 35.30 area, which was a bit of a problem for it, and it looks like it's strong at this stage. I mean, I've made it fairly clear that I think that there is some good reasons for this to potentially get to that 3,900, 4,000 over the month of seasonal strength being November. Speaking of seasonal strength, let's move over to our first index, and that is the IWM, the Russell 2000. Now, we like this index at the moment because it's broken past what has been a terrible 2021 for this indice. This is horrible. 2021, it's been in a monstrous channel of boringness, but we have finally broken through that, and we called it last week. We discussed it as a community. Many of you guys got it right. We talked about this level being the key break, really, and it started moving forward. Now what we hope is that if the rest of the markets come down, what will Russell do? Well, the Russell will still come down. You can't expect it to hold up if every index is coming down. But the daily 20 is going to be there to meet it around that previous resistance equals support. So if you feel like you missed out on the Russell trade, there's always a potential to bring your system together with key zones such as this one, and then hopefully be able to take advantage of that if that's what you choose. If you're taking the distance, you take the distance of the channel, extrapolate it out, and it gives you just underneath a 260. Why do we like the Russell? Well, of course, October was strong for it. November, seasonally, very strong for it. And then December also seasonally very good averages over a coin flip in the positive territory, which is always a good stat to have in your favor. Let's move over to the S&P 500. So we have long leg doji. Now, we didn't quite get decision made. It's kind of annoying. We were seeing it during the live stream, and we were doing the live stream of the close, and it looks like we were going to get the decision made. And what I mean by that is if we have a low, we have a high on the long leg doji resistance, and then we get a closure underneath. That's what we call decision made. Effectively, the market is showing that it is weak and that it wants to continue to move down. Unfortunately, we rallied here at the close. Look at this stupid rally. Comes up and makes it incredibly marginal. It is the first sign of weakness. Some people say, but Tom, we've got a peak, we've got a trough, we've got a lower peak, and we've got a lower trough forming throughout the day. Yeah, I tend to agree with you. It's certainly the first sign of weakness. It's just not super weak. And it wasn't really the sell-off that I would have liked to have seen initially. The Nasdaq looks a lot bigger and better in terms of sell-off due to Tesla. So we're looking for that daily 20. That's the first level. A lot of people want this daily 50 exponential moving average, that 4,500 zone. And I'm not sure if we'll get that deep, but certainly the daily 20 is long overdue to be touched. And why we always mention this is because it's basically mean reversion. When the market runs away too much, it really likes to come back and touch this zone and then find buying pressure. I mean, the 50 and the 20 have been very strong levels. Look at the 50, the 20s here, the 50, very, very strong ever since the pandemic, and really any time before that. We hit the monthly R1 pivot, long leg doji. It's time for it to come down. Let's hope it does. If it doesn't, it's not really that great. I'm not excited for it in the markets because I don't really want something going like this. All off the screen. It's not ideal. If it goes off the screen in terms of vertical, the problem we have is we get a blow off eventually. And that blow off turns into a brutal kind of bashing for the retail crowd, for traders in general. And while some may like that, I personally don't. That's the way I look at it. I prefer the two-step sword, one step back, more non-ballistic market if possible. Let's check out the Nasdaq. So the Nasdaq was weaker, mostly due to, of course, Tesla coming down so much. And we think about it and what happened. We did get that change of trend on the 1 hour. We kind of got that peak, that trough, that lower peak kind of idea, and then we got the lower trough. It is weaker. It's still fairly marginal. It's one of those positions where if you're looking towards the weakness side, some people may scale in. Again, the targets are really something around the 50 exponential moving average on the daily or the 20. And the 20 sits right on the previous resistance. So it really makes sense. Bam. And then possibly a further movement up through the end of the year. What a great level at the top of our ascending channel here. We've been discussing it for weeks. This is exactly where we expected it to go and exactly where we now expect it to have some kind of technical weakness. Let's move through to the crypto markets now. So ETH-BTC coming back to a point of support. Previous resistance here on ETH-BTC. Ethereum's looked pretty good in recent weeks. And certainly a nice kind of bounce area. We've got another coin that's starting to come alive, which we'll talk about very soon. A few of you might guess what it is. If you are watching, quickly put down in the comments, see if you guessed which one I'm going to talk about soon. And we have here BTC looking quite strong. So Ethereum, we're still looking at that 5,000 target. Certainly it's a pretty key zone. We're seeing that alts kind of get bigger now that Bitcoin's consolidated and found this strength. We've seen Ethereum come through. Obviously, a few other coins like Polkadot, etc., do very, very well in this season so far, and hopefully they continue to do it. Let's talk about Bitcoin. So Bitcoin, new all-time high, no doubt. But closing in 1 hour and 42 minutes after this video, we have what looks like at the moment a long leg doji. So obviously a high, a low, and a closure. There's a lot of bullish fever about this coin right now. Bitcoin is really, people are super excited. I would have liked to have seen a little bit more consolidation before the next breakout. I mean, is this a breakout high? Yes. Could I see a little bit of weakness before it goes and rallies? I think so. That's more of a guess than anything else. The actual technicals are just saying bull, 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 bull at this stage. But just as a gut feel more than anything else, I wouldn't be surprised to see a little pullback followed by that rejection movement up. And that's not really based on the technicals. If you're in this, what have you got to be worried about? Nothing really. I mean, look, the whole thing's holding the daily 20. It's moved to a new all-time high. It looks strong. The sentiment's strong. Everything's looking pretty damn good. And I'm not calling a monster crash or anything. I just think that with Bitcoin and with crypto, you've always got to expect that next potential of chance of 10 to 20% in like a day like this. and then the rally resumes. You know, they always like to clean out everybody before they get there. So if you guessed 88, you would be correct. Well done, chat. Well done, everyone in the community. Yes, 88 came alive again here. We've got that base that's formed around that 192 area, and it's starting to look much, much healthier. This is the first real rally we've seen. You can have a look here. The volume is well up on ADA, and it's going towards that 230. And I think if you look at any of the real kind of comparisons, unless we actually look at ETH-ADA, I think we can probably get that, can't we? Can we get ETH-ADA here? I don't have it at this stage. But if you look at any kind of comparison here with ADA price to Ethereum, ADA price to BTC, it's actually quite far behind where it's been in previous hype sessions during that August into September hype. So there's a strong community behind this coin. 230 resistance, a key pivotal area. And then after 230, we're talking 260, we're talking 280, and possibly even back to the $3. Remember, this hasn't done anything in a very long time. 230, a very key pivotal area, and it's moved above the daily 50 as well for the very first time in a while. So signs showing a lot of life here in ADA. Moving ahead for the week in terms of stock market news and general market news, we've had our PPI now data. We've got CPI coming out Wednesday, 8:30 a.m. before the open. So that'll be very important, and we'll see how that works out. And then we've of course got bank holiday on Thursday, November the 11th. So just remember that that is coming. Guys, want to just quickly give a shout out to everyone that's been coming to the close streams. I do appreciate you guys very much. I appreciate everyone that's been watching the daily videos as well. If you're interested, please subscribe, smash that like button as well. It does help us out. And I want to just make a quick announcement. Unfortunately, there will not be videos on the Wednesday close unless there's something really big happening, but I'll be back, of course, doing videos straight after that. So it's just one day that there might not be a video, but after that it'll be all big. We'll be keep kicking ass, and we very rarely skip any sessions. So just a quick announcement to let you guys know, if it's a massive big day and it's down 3%, then of course I'm coming in and I'll do it for you. But yeah, there won't be a live stream for sure, and the video, it'll be touch and go. So we'll see how we go with that one. Thanks so much for the support. We'll see you in the next video.